Welcome everyone to the Kendall Report. It is great to be back with you. I'm going to be doing a couple announcements before we get into tonight's video, but I want to make sure everybody understands and has good expectations of the channel going forward. Now, I'm going to be focusing in on macro events, hopefully get some good rants out for you folks and be able to really get into a flow of the things that I'm seeing that are happening in the markets, kind of between the lines of what I'm doing on the Substack account. So if you haven't seen me on YouTube and you're not aware, I have a Substack account now, which is kendallreport.substack.com. You can go there and you can sign up. The way it's going to work, as of the 1st of February, the daily commentary that I used to do on video is now being done for the last month, basically, on Substack. That is going to be $8 a month, simple subscription, cancel anytime you want. But that will be a daily letter that comes out, will cover all the micro events. On a regular basis, I'm going to start talking about macro events that are happening on the YouTube channel. I'll unpack that there. Some of that will probably flow back into Substack and all that. So make sure you understand that. There'll be links down in the description so you know how to subscribe, how to get to all this information. Let's get into tonight's video. Well, folks, we're coming into another Fed event on the 31st of January. That will be the final trading day of this month. And I'll talk a little bit about what we've seen this month. And as we get ready to walk into February, there's going to be, in my opinion, February is going to be a significant month. It's going to set up the rest of the quarter and possibly even into the first 6 months of the year. So it's going to be critical, the action that we see coming out of this month. So far, just looking at what's happened in January right now, is we've had this underlying bid. All of a sudden, we printed up to 49.32. Not a lot. We were trading about 100 points lower on the S&P, and at this range where, that's not a lot of percent movement in the markets from where we stand right now, but it does absolutely set the tone for coming into February. There's an old saying that as January goes, so does the year. I'm not sure. That it looks like we've got a positive month. We'll see what happens here. This is a very unique year. We've got an election. We've got multiple wars going on around the world, lots of dynamics. So it's not going to be what I would call a storybook or cookie cutter year. People talking about, well, in election years, this normally happens. Nothing's normal as we sit here right now. So let's talk a little bit about the Fed meeting that is coming this week. There's a number of things, just looking at my notes here. The Fed's basically is really not looking to do anything. They're not going to raise rates. Nothing's going to happen on that level. I keep telling you the thing to watch for is if they tell you they're going to change the rate of the QT or the selling of the bonds that they've been doing to downsize the balance sheet. Now, there was a rumor just a few weeks ago that one of the Fed members said, and all of a sudden there was a frenzy and bullish rally, and that's really what got us up into the 49 handle initially, was this rumor that there was going to be a backing off of QT. And I told you in the past that that is the single biggest thing that you need to watch for. I don't think the Fed's going to lower rates at any time soon. There's a lot of folks that seem to be buying into that if you look at some of the market indicators out there, but I still don't see that happening. Everybody's been focused on a March meeting. So looking at this meeting this time, what we want to do is watch what the rhetoric is going to be around, if there is any discussion by Powell in the conference call or any part of the statement that has anything to do with this QT. Short of that, nothing's likely to happen. Let's take a look back at some of the events that have already happened. I'm looking at my notes here. We saw the CPI numbers come in a little bit hotter than everybody expected. They're at 3.4%. Everybody started to go, wait, maybe they're not going to do the March drop in rates, and that seems to be how the market's realigned itself. And if you go back, what I'm telling you, just on the rate structure in itself, what I've been telling you is that my expectation is that the yield curve will start to normalize around 4.25, somewhere between 4 and 4.25. And what I mean by that is the front end is going to stay high because they're going to keep the Fed funds up above that 5.2% rate. The effective fund rate every day is around 5.33 is what that market is telling us where that very front end is going. You see a little bit of a dip as you come into the 13-week T-bills and then also into the 1 year. But once we get into the 2, 5, 10, and 30, I'm expecting to see just pretty much a flat line come into play there and be somewhere around, probably fluctuating around 390 to 4.25. I've been talking about on the daily Substack, we're likely to see a move up to as high as 435 on the 10-year. I usually focus a lot of my analysis on that 10-year, but overall, the yield curve is just going to start to flatten out. At some stage, I'll draw some things and put that into the Substack. Like I said, the Substack is going to be an important element to continue to follow me, especially on a daily level, and get some of the micro feel for what I think is happening in the markets. But as we continue to look at the expectations for this week, like I pointed out, that the Fed is going to be focused pretty much on the employment numbers. Now, we get employment at the end of the week. We have some things there. I'll discuss that here in more detail in a minute. But basically what we're looking at here is everything has been very stable, especially on the labor markets. We continue to see claims numbers, continuing claims stay within a range. We're not really seeing a bump up in any of these metrics, which are telling us that anything's changing. So we see this completely very strong underlying labor market that comes in. Once we get behind the scenes a little bit, we start to see some of the noise in the markets from the standpoint of maybe there's questions about certain segments, certain metrics in the economy. And that is where we'll see some of the anxiety and some of the confusion that's coming into market activity from day to day. So on the very beginning of the week, it's going to be focused on housing. We've got housing price indexes coming out, Case-Shiller. All of these numbers seem to be continuing pretty good. We have events coming on Tuesday. I'll go through detail on the Substack letter tonight on what all these mean. Initial claims, nothing looking to change there. But let's spin forward. And the key element that I want to discuss, and it goes to my annual report. So if you haven't seen the annual report, it's out there right now for free. You can go out, and it came out, I believe, on the 29th of December, around that date. If you go back on the previous releases on Substack, you'll find it there. You probably have to do a free subscription to get on that. But once you go there, one of the key elements that I've been talking about is productivity. And this has to do, I'm big on AI, on what the effects of AI are going to be. I believe 2024 is going to be the first year as we go through it that we're going to see some of the effects of AI coming into play. There's going to be a lot of advancements. A lot of folks are starting to implement different types of strategies. I was watching Bloomberg probably 2 weeks ago, and I think it was CrowdStrike, the CEO was discussing that they took a task that used to take almost 8 hours to do a data analysis for a customer. They took that job down to 10 minutes on using AI. So if you can start to compress jobs down 8 hours into 10 minutes, you're going to see productivity go through the roof. So this number right now, just looking at the notes here, I expected to be 2.1% positive is expectations by the market. Previous was 5.2, but I'm looking for at some stage, maybe not at this particular time, but I am looking for this number to start to jump. And I think it's going to see some insane numbers, but it probably not going to happen till mid-year, maybe into third quarter. that's one of my focuses. We'll be watching that report. I'll comment this on the Substack as well. Going through the rest of the week, we get into the unemployment numbers. Unemployment rates expected to be 3.9, up from 3.8 last month. I'm going to show you a chart here shortly that will, my projections are that the highest level that we're likely to see coming into April is around 4.28, but 4.28 is probably the peak. And that will get us to, I think, where the economy is going to not necessarily be weak, where there's a rotation of employment starting to happen. A lot of folks still are on this dialogue that all kinds of people are going to lose jobs because of AI. I think there's going to be ultimately more jobs created because of AI than lost in certain areas. So the key is going to be, from a stock investment standpoint and from investing, is choosing not so much the direct play in AI, but the play on who's going to be making money the most, who's likely to benefit the most from implementing AI into their businesses. Now, I'm convinced that most of these are mid-cap and small-cap companies that are going to do that. I've been on this thread with a lot of folks that we're going to see the small caps pick up, but there's so many dead zombie companies in the small cap. It's just not possible to get that index moving, at least not at this moment, until we see some of these elements that I'm talking about. We're going to be just seeing that rotation happen. So it's down to individual stock selections. I plan on, as we go forward in the weeks to come, to talk a little bit more about what areas, what companies are likely to benefit from that. Those of you that have been around with me a long time know that really what I'm good at is figuring out these thematic switches. Last year, it was the home builders. Our wave tech strategy and our modeling strategies in our software did about 75% return last year, and home builders, right when everybody was telling me that not only was home builders going to be a loser, that real estate was going to collapse. There must have been millions of videos on the collapse of real estate. And you know, as I've told you before, if you want to be good, you just pretty much fade them. It's like the Kramer trade, right? So the thing that you want to pay attention to is the noise in the markets and how you can come up, not necessarily just a contrary view, but look at places that aren't being talked about. That's where the benefits are going to be, and maybe even areas that are being talked about very heavily that are likely to be at risk. Let's swing back to the Fed just as we set this up, because I think one of the key elements that we're going to continue to hear the Fed talk about is going to be inflation, right? We know that already. They're not at all worried about anything going on in the labor markets. And as I've told you, every time we come into a Fed meeting, they already have all the metrics on their desk. They're not waiting for the reports to come out. The calculation for unemployment, all of those numbers have already been summarized and are available. They're not magically, all of a sudden, they finish them 2 hours before the report comes out on Friday, or any of these reports as far as that goes. These have been compiled. They're on Jay Powell's desk. They know everything that's going on. So as they're in their meeting this week and discussing these things, they have 100% of the metrics. Do not be fooled that somehow they get it the same time we do. They are the ultimate insider, and they've always had that edge. It's not, I think some people actually think they get it, the same time we do. That's not the case. Listen, if they mention QT, they mention anything about slowing of the selling, anything along that lines, that's going to be reasonably bullish. I suspect, in summary here, is that they're going to keep a reasonably bullish tone, even though, as you'll see, not going to do any charts in this video today. You'll have to get the Substack tonight, but I will go into detail on what the algos are telling us. But right now, they're flattening out a little bit, but the WaveTech database remains very robust. There's nothing at all that is indicating that it's rolling over. In fact, we're seeing the opposite. An acceleration in the number of buys on a daily. We went from 58% back to around 63%. So we're seeing some traction come back in. On the intermediates, it just stays solid here in this 80 handle, 80% bullish. That's 8 out of 10 stocks are bullish in the database yet. And forward looking, I showed you in the Substack. So if you sign up for the free Substack, you can go back and look at the report I put out on Friday. And I showed you something that I think is unique, is that what we're seeing in the metrics right now is that a lot of forward looking on the sectors is forward-looking returns are still there. And I'm estimating right now that this will carry us into July and possibly into October, meaning the underlying tone and a lot of these sectors are going to be reasonably bullish. Now, what I'm working on right now, I've been kind of talking about this on the Substack, but what I'm working on right now is determining which one of the sectors are going to be in play and which industry groups are going to be in play. And that's going to be the key element there. So I will continue to update that. Go into the description below. Make sure you sign up for the freebie. I'm actually working on a couple things. We're working on a book on PPMs and trading. A whole lot of stuff is about to come out, folks. So it's going to be pretty exciting hanging around. I'll keep doing these little macro events, and ultimately possible that I may announce, if you stayed around to the video to this long, that I may announce a live stream on Wednesday to interact with everybody. I want to thank you for watching. Thank you for being part of this channel. Looking forward to doing a lot of good work going forward. Thanks again, folks. Have a good week trading. We'll see you on the next video.